Hello and welcome to this very first edition of Market Review by Harvest Asset Management in 2026. (2025) was a year characterized by further decline in inflation across the CEMAC state, reflecting a similar trend observed since the end of 2023. At the end of September 2025, sub-regional GDP stood itself at 2.8%. Unlike Chad, which is experiencing a deflation of -0.2%, other CEMAC countries are seeing a decline in their inflation. However, Gabon is witnessing a surge in inflation in 2025. If this trend continued, it could have reached 2.8% by December 2025. Despite this level of inflation, the central bank raised its key interest rates by 25 basis points after two consecutive status quos, and a 50 basis point easing observed in March 2025. As concerns annual average inflation, this monetary tightening is explained by a decline of more than 12% in foreign exchange reserves due to imports and debt servicing. Thus, they are still weighing up the risk, particularly budgetary adjustments in 2026 finance laws, disruptions to supply chains, climate change, and lack of infrastructure. Nevertheless, we expect two monetary easing measures this year after the maintenance of 30 March 2026. After a less robust recovery in 2025, when economic growth stood itself at 2.4%, driven by the oil sector of about -1.2%, the recovery is expected to continue in 2026, mainly powered by the non-oil sector. This strong recovery in 2026 will be driven by Central African Republic with an increase in economic growth of 5.3%, followed by Chad 3.7%. And this trend is viewed differently by the IMF, which reviewed Chad's growth outlook to 5.1% during the country's first enlarged credit facility review. Furthermore, unlike Cameroon, the IMF remains less optimistic than the central bank about the economic outlook for the CEMAC countries in 2026. As concerns the budget envelope, faced with declining oil revenues, Congo, Equatorial Guinea, and Chad have reviewed their budgetary envelopes for 2026 downward. Gabon, on the other hand, has increased its budget envelope in 2026 by 51.2% in order to review its structural projects. Cameroon has increased its budget envelope to 14%. Only Congo is expected to have a budgetary surplus in 2026. Gabon continues to have highest deficit of 810 billion francs CFA, linked to increase in investment expenditure. Cameroon, meanwhile, will see a deficit of 631 billion francs CFA, linked to an increase in operating expenditure. These deficits create an urgent need for financing in the financial market. As concerns the financial rating of these CEMAC states, we have had no increase in the financial rating of CEMAC states in 2025. Furthermore, Gabon saw its financial rating decrease due to high credit risk. In 2026, we expect the CEMAC countries' financial rating to remain unchanged in the short term, and we are going to have a keen observation for the medium-term ratings. We have had issuance volumes increase despite sluggish signing in 2025, explained by the fact that in 2026, CEMAC states plan to raise 4,000 billion francs CFA in the public sector of the market, with 2,055 billion in treasury bills, reflecting potential cash flow pressures. This trend is particularly pronounced in Equatorial Guinea, where treasury bills account for 76% of issuances. That is 319 billion francs CFA in treasury bills out of 419 francs CFA of issuance, followed by Cameroon raising 65.7% of its investment in treasury bills, that is 765 francs CFA out of 1,165 billion francs CFA of all issuance. Gabon raised 54.1% of its issuances in the treasury bills, accounting for 565 billion francs CFA out of total issuances of 1,046 billion francs CFA. Other countries are focusing more on medium and long-term debt security. These fundraising efforts will face high market costs, driven by a monetary policy that is expected to remain restrictive, and by limited improvements in economic growth and the financial situation during 2025. As concerns the market debt ratio, public security market debt ratio stands at 12.0% of CEMAC GDP. In 2025, public security market debt recorded an increase in 24%, bringing a total outstanding amount to 9,310 billion francs CFA. Relative to the sub-regional GDP, this level now represents 12.0% of CEMAC GDP, underscoring the growing reliance on domestic security market to finance public needs. Given the expected 2026 issuances, the volume outstanding is expected to be at 11,000 billion francs CFA, reflecting continued treasury pressures and growing importance of public security markets in the region. As concerns the dynamism in the financial market of the CEMAC region, BVMA oil share has grown to about 13% since January 2025, explained by the fact that since January 2025, SEMC have had an increase of 4.3% in its value. Safakam has had an increase of 14.1%, Sokapam an increase of 8.7%, La Regional on the other hand has had a decrease of 1.2%. Bangre and SHRE have equally had increases in their values. The stock market is now expected in the upcoming months the listing of BHGFE Holding, which is willing to raise 125.8 billion francs CFA, Samba Assurance, which is expected to raise 5 billion francs CFA in the equity sector of the market, and equally Renaproof expected to raise 8.4 billion francs CFA in 2026 on the equity segment of the market. We're equally going to have issuances of the sovereign bonds of Cameroon, Gabon, and Chad on the bond sector of the market. As concerns the gap between the yield curves of Gabon and Congo, in the short term, the cost of raising funds for Congo is significantly higher than that of Gabon, thereby increasing the issuer's refinancing risk. However, over the medium and the long term, Cameroon appears to be the least risky issuer compared with Gabon and Congo, as investors demand a higher risk premium from the latter two countries as their maturity extends. As concerns the spread in the yield curves of Congo and Gabon, we have had significant yield gaps in the short term between Gabon and Congo, explained by the fact that in the short term, the cost of raising funds for Congo remains significantly higher than that of Gabon, thereby increasing the issuer's refinancing risk. Over the long term, the trend is reversed as investors require higher risk premium on Gabon compared to Congo, although the difference is less pronounced in the fronts of the yield curve. Some key points to take away. Macroeconomic context, we have had economic resilience driven by the non-oil sector. We have had a decline in inflationary pressures. We have had rising budgetary envelopes for member states of the CEMAC country. In the capital markets, we have had status quos expected on sovereign credit ratings, an upward trend on bond yields, and both an increase in the equity and the bond segment of the market. For optimal portfolio allocation, we advise our investors to choose low-risk government bonds. We equally advise them to take note of upcoming political events in their portfolio allocation. By so doing, we advise and recommend them to allocate 85% of their investments on sovereign bonds and 15% on equities. We thank you for your kind attention, and we hope to see you very soon for another edition of Market Review by House Asset Management.